All right, fellow AMC stockholders, XMAX Trading here. I'm going to go over some important DD that I found. So if you haven't subscribed already, consider subscribing to the channel. Let's keep it going, and let's get started. So here's a good screenshot from Twitter talking about all the movies come out in 2022. This is why I'm bullish on AMC. You got Morbius, you got Uncharted, The Batman, Secrets of Dumbledore, which is a Harry Potter, Sonic 2. That's pretty cool. Sonic 2, you have some Marvel movie. I can't see that one. Top Gun, John Wick 4. Holy crap. Muppets, I think, or whatever it is. But, why can't I zoom? Jurassic Park in June. Thor. Buzz Lightyear. Black Adam. Spider-Man again. Wakanda Forever. Avatar 2. Aquaman. Secret Invasion. Andor Star Wars to be announced sometime in 2022. Obi-Wan Kenobi, Moon Knight, She-Hulk. Holy crap, the shorts picked the wrong company to short, dude. Look at all these like billion-dollar movies coming out. And you know the apes are fired up. They're going to go see all of them. You know, I mean, they picked the wrong company to short. So looking at the TA of AMC, I've noticed like, okay, it's in this channel for right now. Okay? For one thing, if you take the very bottom to the very top so far, so the very bottom from last year, let's say $1.99, to the top of like $68, $70, and do the Fibonacci on that retracement, then it comes out to this 0.615 pretty easily. Actually, and if we do the reverse, let's see what that does. Yeah, so it's not even touching. If you go reverse, then yeah, it will not even. It's still in the bullish area. It's gonna bounce off. So yeah, it's pretty amazing. And then like I was looking at the stochastic, the logarithm, because this is a log chart. Okay, so a log of stochastic RSI. This indicator down here. You can see it's approaching the very end of the bearish territory. You know, it's coming down. So you have RSI as the tan, where it's oversold, overbought. So I did that for the 7-day. 7 RSI like low 28. Let's just do 7. So it's getting near there. So you can kind of, you know, adjust this and see what works best for the data. Stochastic length, oops. So yeah, it's kind of interesting. I think using a logarithmic chart, using logarithmic indicators, and you know, on a weekly chart, you can see the big picture, right? It's easy to get overwhelmed with the daily and the weekly, you know, every week, like, oh, this is still down, but still, it's actually bullish. Even has to have more volume, though, for certain. So let's look at stochastic RSI. Stochastic RSI is an indicator that uses technical analysis that ranges between 0 and 1, and then is created by applying the stochastic oscillator formula to RSI values, rather than to standard price data. Using RSI values within the stochastic formula gives traders an idea whether the current RSI is overbought or oversold. Yeah, I think we're getting to oversold. Depends on what measure you use. RSI length of 14 on the weekly. Yeah, we're already there. And oversold. RSI length of 14. Yeah. So pretty interesting. What if we did 56? Yeah, but any measure, it's definitely oversold. Stochastic oscillator was developed to take advantage of both momentum indicators. In order to create a more sensitive indicator that's attuned to a specific security's historical performance, rather than generalized analysis of price change. It's kind of interesting, right? You can see here the stochastic within the RSI bands, and you can see if it's combined, you know, how it works together. Stochastic RSI. Key takeaways: stochastic RSI above 0.8 is considered overbought, while reading below 0.2 is considered oversold. On a 0 to 100 scale, 80 is overbought, 20 is oversold. Overbought does not mean the price will reverse lower, just like oversold does not mean the price will reverse higher. Rather, the overbought oversold conditions simply alert traders that the RSI is near the extremes of its recent readings. A reading of 0 means RSI is at its lowest levels in the 14 period, or whatever period is chosen. A reading of 1 means RSI is the highest level in the 14 periods. Here's a formula. How to calculate it. Record level RSI in 14-day periods. What does stochastic tell you? Stochastic RSI is developed by Tushar Chandy and Stanley Correll and detailed in their book The New Technical Trader, published in 1994. While technical indicators already existed to show overbought and oversold levels, the two developed stochastic RSI to improve sensitivity and generate a greater number of signals than traditional indicators do. Stochastic RSI is deemed something oversold when the value drops below 0.2. RSI values trade in the lower end of the predefined range. Conversely, above 0.8 means extreme highs. It could signal a pullback, but not always. Along with identify overbought, oversold conditions, stochastic RSI can be used to identify short-term trends by looking at the context of an oscillator with a center line of 0.5. When stochastic RSI is above 0.5, the security is trending higher. When it's below 0.5, it's bearish. Stochastic RSI can be used in conjunction with other technical indicators or chart patterns to maximize effectiveness, especially given the high number of signals that it generates. In addition, non-momentum oscillators like the accumulation distribution line may be particularly helpful because they don't overlap in terms of functionality and provide insights from a different perspective. The difference between stochastic RSI and RSI. Stochastic RSI relies on a different formula which generates RSI values. RSI is a derivative of price. Meanwhile, stochastic RSI is a derivative of RSI itself, or a second derivative of a price. One of the key differences is how quickly the indicators move. Stochastic RSI moves quickly from overbought to oversold, or vice versa, while RSI is much slower. One isn't better than the other. Stochastic RSI just moves more. It moves more, and it moves more quickly. Limitations: it can be volatile. Some traders will take a moving average of the stochastic RSI to reduce volatility, and it makes the indicator more useful. A 10-day SMA of the stochastic RSI can produce an indicator that's much smoother and more reliable. Also, stochastic RSI is the second derivative of price. In other words, its output is 2 steps away from the actual price, which means it tends to be out of sync in real time. Yeah, but we're looking at the weeklies, though. Let's see if we can get a better handle on this. I'm trying to find the optimal see the midline, see if it reverses and it stops reversing, then it's bullish. Okay, yeah, it peaks here, comes down, still not bearish enough. Still, and then it line crosses over. So yeah, it's still kind of bearishly dropping, but it could start reversing at some point. RSI length 14. This is really interesting, guys. This is pretty. K28 D7 RSI length 14, stochastic length 14. trick is to figure out which one's the best indicator, you know. That I don't know. RSI length of. Alright guys, I'm just playing around with this. See you in the next video, and I know we're all, not financial advice, we're all like AMC, so I'm going to see some movies, eat some popcorn. Talk to you later. Bye.